This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Indian state refiners will buy 36% less oil from Saudi Arabia in May than normal, three sources said, in a sign of escalating tensions with Riyadh even after the kingdom supported the idea of boosting output from OPEC and allied producers last week. Energy relations between India, the world's third biggest oil importer and consumer, and Saudi Arabia have soured as global oil prices LCOC-1 spiked. New Delhi blames cuts by the Saudis and other oil producers for driving up crude prices as its economy tries to recover from the pandemic.
Strong economic data from China and the United States helped to lift oil prices by 2% on Tuesday, recouping some of the previous session's losses. Brent gained $1.11, or 1.8%, to $63.26 a barrel by 11:53 a.m. Eastern Daylight Saving Time, 15:53 GMT. U.S. West Texas Intermediate, WTI, crude rose $1.16, or 2%, to $59.81 a barrel. Prices were buoyed as March data showed U.S. services activity touched a record high. China's service sector has also gathered steam with the sharpest increase in sales in 3 months. In addition, England is set to ease more coronavirus restrictions on April 12, allowing businesses including all shops, gyms, hair salons and outdoor hospitality venues to reopen.
Moving on to the top news in the energy sector.
U.S. crude oil production is expected to fall by 270,000 barrels per day, BPD, in 2021 to 11.04 million barrels of oil per day, the U.S. Energy Information Administration, EIA, said on Tuesday, a steeper decline than its previous forecast for a drop of 160,000 barrels of oil per day. U.S. production has grown slowly as oil prices have climbed because large public companies, under pressure from investors, have maintained capital discipline and preserved cash. The EIA's forecast includes estimates that U.S. crude production declined by 800,000 barrels of oil per day in February, mostly because of cold temperatures that affected much of the country, particularly Texas.
U.S. power consumption will rise 2.1% this year as state and local governments ease coronavirus lockdowns, the U.S. Energy Information Administration, EIA, said in its short-term energy outlook on Tuesday. The EIA projected power demand will rise to 3,883 billion kilowatt-hours in 2021 and 3,935 billion kilowatt-hours in 2022 from a coronavirus-depressed 11-year low of 3,804 billion kilowatt-hours in 2020. That compares with an all-time high of 4,003 billion kilowatt-hours in 2018. The EIA said the share of natural gas-fueled power generation will slide from 39% in 2020 to 36% in 2021 and 35% in 2022 as gas prices increase, while coal's share will rise from 20% in 2020 to 22% in 2021 and 23% in 2022.
Next, we have the top news in metal markets.
Copper prices climbed on Tuesday due to supply concerns after top producer Chile closed its borders over a spike in coronavirus infections. Benchmark 3-month copper on the London Metal Exchange (LME) was up 2.2% to $8,979 a ton in official trading. Coronavirus cases in Chile surged past 1 million, while infections across Latin America, which has some of the world's biggest copper mines, are also rising.
China steel prices jumped to record highs on Tuesday, boosted by strong domestic demand and concerns over supply curbs in the world's biggest producer and exporter of the construction and manufacturing material. Construction steel rebars May contract on the Shanghai Futures Exchange ended the daytime trading session 2.1% higher at 5,180 yuan, $791, a ton, after earlier climbing to 5,200 yuan, the highest on record or since 2011. Hot-rolled coil, which is steel used in car bodies and home appliances, rose 0.9% to 5,566 yuan a ton. SHHCCV1, after earlier touching 5,589 yuan, its loftiest since trading began in 2014. We will now look at the top news in the agricultural sector. Ukrainian wheat flour exports fell to a 10-year low of 4,016 tons in March due to the high cost of wheat, the local millers' union said on Tuesday. The previous lowest export level was in January 2011, when Ukraine exported 3,445 tons of wheat flour. Ukrainian wheat export prices rocketed in the first half of the 2020-21 July to June season and exceeded $300 per ton in January.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.